So, Stephen, what guidance have we got from the Central Economic Work Conference that wrapped up on Friday?
Yeah, go figure. These Chinese leaders, they like stability, and that's their main priority. Maintaining economic stability after what was a fairly tumultuous year on the regulatory front and, of course, on the debt front and the subsequent crackdowns on the likes of China Evergrande. Of course, the main priorities for 2021 turned out to be kind of de-risking the property market and, of course, controlling the debt loads on these big conglomerates like China Evergrande. But we've had a confluence of economic pressures, obviously. We've had flare-ups of COVID in China. We've had weakening consumer demand. And again, the property weakness, a main pillar of the economy in China. Let me just give you some of the key takeaways from three key economists coming out of this Central Economic Work meeting that wrapped up a three-day meeting in Beijing on Friday. That is the body and the meeting every year that they set economic priorities for the coming year, so for 2022. So ensuring stability is number one. But Larry Hu, economist at Macquarie, expects policymakers to start with more conventional monetary and fiscal tools, such as further RRR cuts and accelerated infrastructure spending. We're likely to see more fiscal spending right in the beginning part of the year. Authorities love to front load the fiscal stimulus in the beginning part of the year. Look what we saw in the first quarter of 2021, a big jump in economic growth and then a tapering off. But it's getting down to what the economists expect, about 3.1% growth in this current fourth quarter. Now, Larry Hu says they could loosen property curbs and restraints on local government debt if those conventional methods like RRR and accelerated infrastructure spending, those old tools that they like to use, if those don't bear fruit. All right, Ding Shuang at Standard Chartered says fiscal policy is expected to play a main role in supporting growth next year, while housing policies will see fine-tuning. They will not see a major shift. So the crackdown on the pressure on the over-leveraged property developers and also some of those property curbs that have limited some of those sales and dampened sentiment, obviously, in the property market could stay in place. Okay, and finally, Jian Chang at Barclays. She says a call for counter-cyclical policies was the first time authorities have used that phrase this year. She says that should help ease market concerns of a sharp slowdown in economic growth. Sounds like a recipe, what the government likes and those authorities in Beijing like, ensuring stability.